Good morning, good morning, good morning. Welcome. Futures. Futures are up. Continuation from yesterday. Not really up much. Claims are down. We'll see. The markets have liked when people are losing their jobs, people dying. Now that that's not happening, we'll see if the markets decide to go bid on that or not. Doesn't really matter. The weekly number anyway. When it comes to more economic data or anything else, really all we do have is claims every week now. So it's going to be a little bit, right? Fed said they're going to talking about things, which is always a very fun topic when the Fed talks about possibly talking about something that they can then possibly do in the future. That was yesterday's Fed minutes. Again, that comes from a meeting from 2 weeks ago. So again, in terms of big things, it's gonna be a little while. It's gonna be a little bit. In terms of right now, we got 2 days left in the week. I would say from reaching a low yesterday, 2 days of lower prices, but not really the story. Again, we were bid all day yesterday. When you see intraday action like we had yesterday, it's important to think about what that leads to in the rest of the week. This would be a nice. It would have been the nice place to pick up new low positions, right? And so coming into the last 2 days, I don't really have much buying to do. There are new things that I want to think about, possibly for some risk over the weekend. We'll see if we can get some, more growth related sort of positions, and then on the travel side, continuing the travel positions in a way that works in our favor. Again, it's short term. It's got a lot of short term volatility, and it offers possibly a chance to take some risk over the weekend to continue those positions. I added the win chart last night, and this idea with the casinos has been on the radar for a while. We haven't really seen it come out of its low like we have seen with things like airlines, which we've done pretty well on. Obviously, yesterday, taking it down just a step, but just a step really. And so those continuing on pre-market right now as well. So AL almost coming back to where we had it. So looking to try to actually push these a little bit further with some risk, but that would be about it in terms of active positions. Because again, there's really not much out there in terms of short-term plays. We do have things like Ford up here this morning, which has been taking a very similar route. And some of these, again, they're really big questions on clean energy and on sort of the EV front. I don't know if we're waiting for something from the government side, or this is just the scenario where, again, a lot of the flow is going towards a value-oriented portfolio because it's a gain right now. It's growing right now. Whereas a lot of these are gonna be a growth in the future, and it's not even set in stone that that's going to be the case, right? A lot of things could happen, and so again, everything that's basically been happening over the last month or so is it's the same every day. That's what we're doing. It's just about being consistent, disciplined, making sure we buy on those lows every time they come through, and transitioning positions when they call for it. Which the biggest culprit of that is with energy. Energy, we've had to transition the most, but it is one of our benchmark sort of sectors with banks, and it's performed the best so far this year in terms of the market. Banks being first, energy second, followed up by sort of the major healthcare sector, and retail stores after that. Industrials start to come in there, and then again we go down the line until tech is basically at the very back end, right? So tech looking to come back later on. In terms of all the pre-market action, there's really nothing here other than, again, we have things like Ford up 3. In terms of fintech, this is not something I'm going to get baited on. It's important to shy away from anything that looks like a downtrend like this. That's not what we want right now. Even trying to catch a low here, we're going to need to see it consolidate. It's a different story. It is a different story compared to if this was, let's say this was a ticker in a sector that we're actually bullish on, then possibly I'm looking at it. But why hasn't it bounced before here? this is just not a sector I want to fool around with, this sort of fintech area. And a lot of this, again, is tied to some bad flows. It's really that arc sort of linked flow that we don't want to really be a part of. Nothing on Kathy, but this is not the area to be around. The only way we get here is if those retail investors that are coming back from crypto come back into equities and decide to go back to what they were doing before, which this is going to be an important new factor that we're looking for is where is retail? Where is retail, right? And so that's something that we're going to keep our eyes open for. I would say it's most likely tech, since institutional investors are all over value. I don't think retail really wants to jump into the V word. I think they're going to be over here back into the tech side. We're going to have to look through options to basically find those. We'll look towards out of the money options. I'm fine with scooping up some out of the monies to sell them back to retail. I'm calling for really that June monthly area. So we're already long mega caps. We're buying mega caps every single pullback. Next time I look to add on to that position, I'm going to be looking to pick up some of those retail friendly out of the money numbers, things that are around whole numbers, maybe some meme numbers, your 69s, your 420s. I know it's a joke, but that's actually what gets bought, and you can just play greater fool, right? You're gonna buy something that the fool's gonna buy next, right? That's literally what that game was, and is most likely going to continue to be. And this is where we start to see squeezes come in on the gamma side and see a volatile move that should not be there. And that's when we know we need to get out of that position. As soon as everyone starts buying, we start to sell to them, right? And the only way to do that is if you build a position which calls for buying on every pullback, right? So when we look at mega caps, they're at a low still, right? And so this, again, should not be a major part of anyone's portfolio, but it's definitely one that you can't shy away from, I would say, because, again, you're leaving points on the table. It's kind of hard to go all into value and then leave out the biggest companies in the world. It doesn't really make sense because you're using a rationale for one thing and then discounting it on another when that's really not what's happening, because you can't just say that we're buying everything because of inflation. It would affect everything in a very similar way. So that doesn't really make much sense. So we're staying consistent on that trade, but we're going to add in the retail flavor part. Dollar keeps pushing down. Again, consistent trend here. There's not much to see. I'm now starting to get back into that. Let's just not look for correlation on this. A big part of this is that the bond market is not correlated to the equity market at all. It's the lowest correlation in like 50 years or something is the actual number. I saw it on Bloomberg. There is no correlation. Again, this is everything that we've been talking about with portfolio rotation. It used to be a 60-40 portfolio, 60% stocks, 40% bonds. We're no longer there. Right now, it's significantly more on the equity front. Just all stocks, derivatives are packed in there. And what is actually going on is this changeover from a consistent bond return to a consistent dividend return, which you then use value and growth to hedge each other, which it's kind of hard to approach this from an institutional front, and so it takes time, which means you're not going to see everything at once, right? I mentioned this a little bit yesterday. This is where you have these very large funds that are shifting their portfolios, and we know they are. Everyone's talking about it, and we see it, but it takes months and months of time to rotate from a $20 trillion treasury market to putting that money, not all of it, of course, but putting a lot of that money into the equity market takes time. And you have to build, and you have to wait for pullbacks, and you have to consistently have orders in. And then sometimes you can't have orders going through because different things are happening. And sometimes when you're buying one thing or selling one thing, it's going to cause another effect on something that you're looking to do. And so there's a lot of balancing going on right now, but the balancing is all being done through the equity market. What happens is that we have so much demand going towards the equity market, right? Again, we've been trading all-time highs. You can talk all you want about short-term pullbacks. It's a non-factor. But what's happening here is you have so much sort of concentration going on. The equity market is already the market that is most affected by every other market in the world, whether it's the bond market, currency market, even we've seen cryptos affected, right? And commodities as well. Commodities now going through this move where they've gone through all-time highs. We looked at those lumber prices, crashed 30%. We've seen a lot of different moves there. Gold spiking, Bitcoin pulling back, whipsawing. All of these different things affect the way in which flows come into the equity market, which makes what may be possibly just a straight line trend, which we see every now and then, go into a little bit more congestion and into short term volatility, which is the area in which we need to be putting our long positions in. Because again, that's a time when there's a little bit of, again, whether it's a congestion or a stop and mix of flows happening, it's churning happening from other markets, not so much the equity market. The same orders are coming through, the same ideas are still in place, nothing changed from yesterday to today, right? These things are not happening. All it is it's fucking hard to get money into the market when we're talking about a lot of market. We're not talking about your small portfolio or my small portfolio. We're talking about an entire marketplace, right? And it's going to take time. It's more than one day. So when you see one candle come in at 1 o'clock and it's up 50 basis points, it doesn't mean anything, right? It literally doesn't mean anything. You need multiple weeks of actual price data for it to actually mean something and to have something taken away, which is where it gets frustrating when people look at a candle and go, well, do you think, or, you're talking to yourself, you're going, well, maybe this is because the market's, trying to price in or do this, and maybe there's something possibly looming here and happening. And, maybe they were looking at the numbers and they didn't like them, right? We've been pricing in everything we've seen for a very long time now. It's very important to go back to presidential election area. And again, we're talking about November in this area here. And think about what we've done since then. Now, I know everything looks the same. It just looks the same, right? I have the same trend lines. Everything looks the same. But it's really important to remember that it may look the same, but the money has really changed from this point here. And if you remember November 9th, the infamous rotation day, it didn't really do anything. If you look at just the numbers from open to close the next day, it was just a 1.25% gain. That's not the story at all on this day. This is the start of the rotation. Everything what we're talking about. This is the day that the button was finally hit across the board to switch up portfolios. And it just happened to be that everyone did the same thing at the exact same time. And so we had a very crazy day, right, in terms of rotating. But it didn't really change the overall path because it's a fucking average. This is just an average, right? And so Wiz has a comment in chat about this a little bit, talking about the difference between the indices, right? So from one index to another, and what would trigger the broad selling across all indices. So first of all, basically every indice would move the exact same way because they're all equities and they're all bundled. They're just bundled tickers, right? There's just a bunch of tickers in them. I made the joke yesterday, which is one of my favorite ones, that someone can tell you that, no, my portfolio is diversified. I own 500 companies. I buy the S&P. I invest in the S&P 500. So I'm diversified across 500 companies. You know what the reality is? You're not diversified at all. You just bought the same 500 companies as every other fucking person in the world because everyone invests in the S&P 500. Do you know what indices are? They're just big, giant, passive funds that everybody's fucking in. So everybody in the world is in a passive fund, in an index, right? The S&P, the NASDAQ, the Dow Jones. They're all the same thing, basically, right? They just have a little bit different makeups. There's a reason why we've seen basically the same broad move happen across every single one. There's literally no difference. This is because it's an average. Averages will remain the same across the board no matter what. No matter what you look at. They're basically all the same thing. All the same thing when you look at all of them, right? The only difference is in the short term, in which value and growth gets traded a little differently, which is why we see the market since the presidential election go into this we'll hedge growth with value and we'll hedge value with growth approach, right? Because they are moving differently on a short-term vol basis. which the reason why you need a hedge through there is because you're still transitioning your portfolio, but over years of time, it doesn't really matter. What would trigger something across every single index is, again, there's fear that the equity market wouldn't go up because of inflation right now, or if there was some sort of reason from another market that would cause, again, like a housing crisis, a pandemic that causes some sort of reason why money is not going to be made right now, right? But that's an average, right? If Apple right now went to zero, do you know how much it would affect the S&P? I think the number is about 2%. I think that's the actual number, is 2%. It went to zero. I don't think it's going to go to zero, right? Maybe it goes down 30%, right? No, that's not even going to happen, right? And so we're talking about individual tickers don't really make up anything. So when you think of an average, this is why we don't trade on averages. And it's why when you talk about anything, no one makes decisions on averages. You always make decisions on a margin, right? On a margin is using every new bit and piece of data, or in the case of stocks, you use each individual ticker as sort of a point of interest, and you make decisions on that new point. And so you'd make decisions by, like what I do here, right? I look for a chart. So for instance, if we look at something like I was just talking about Win, now the travel sector looks very different compared to this chart. I could just go buy Win aimlessly. I could go buy Carnival aimlessly and say, well, travel's up, so I'm going to go buy this. But we know that these things move differently, right? If you compare this Win chart to the AAL chart that we've been trading, they're completely different things, right? And this is where you can say, well, both of them are in the same index, so can't we just trade them the same way? Well, it averages them, right? And so again, that's why, I mean, there's obviously been a big shift in the last 30 years into passive funds. You're talking about your Vanguards and the like, and you just go throw your money in a passive fund. What to do? It just invest in the S&P 500, right? That's it. Get your 12% return and you're good. Which again, if you don't make more than 12% a year, you should go put your money in a Vanguard and put it into a passive fund, right? What I would say is, again, the only way in which things stop, first of all, things don't stop, but the only way that selling comes in is because you can make more money somewhere else. If any of you here can tell me where we can make more money than from the equity market, right? Then I'll be your guest. You let me know. I'll put my money there, right? Why is everyone selling bonds to put them in equities? Because bonds aren't going to make them as much money for a while, because inflation is actually going to beat the yield from bonds, right? Yields will actually be negative, technically. And so this is where the question is, why would you sell? I would sell if I could make the money somewhere else. Right now, cash is negative. If you own cash, you're basically losing money. So where do you put your money? There is nowhere to put the money, right? There is nowhere to put the money. And so what happens? Things just continue to appreciate. And that's what inflation really does. It can cause selling because of an inconsistency in data and not understanding where exactly the inflation is going to happen, right? Sometimes this is where the politics angle comes in, right? Of inflation can absolutely decimate the middle class and below, because prices increase but their wages stay the same, and so then they can't afford anything, and so then the economy crashes, and this again is going to cause equities to come down. So what do we have right now? We have this shift since the November election and the Georgia runoff, that all the banks and all Wall Street wanted people to basically be supported more progressive in social ideas, to support them, because do you know what Wall Street loves? Nice economic numbers. Because you have all these people spending. Look at the retail numbers, right? We've been getting more and more of the retail numbers, with things like Walmart fucking blowing through the roof on earnings, right? That's because you have just normal everyday people that have more money, and it reflects back to Wall Street. And so we actually get to gain more. That's would be what the big change is if that didn't happen. And that's what we saw with COVID, right? Was this very, very quick sort of decimation of the economy this like instant recession, which again we're coming out of, and this is the reinflation. This is like the reopening the economy trade, but it's the reason why I don't call it like the economy reopening trade is that the economy can only open back up once, right? It stopped working once, it can only come back working once, right? It's not going to just keep reopening for years, right? A year from now, are we going to say, yeah, we're doing the reopening trade? Things are opening back up. Are we going to say that in a year from now? No, of course not. What everyone's doing here is a reinflation trade. We've been in a deflationary economy since the financial crisis. We actually haven't been above 2% more than once. There was only once a few years ago that we were actually over 2% inflation. We've been in a pretty deflationary state. You look at other major countries around the world, we had things like Japan has been pretty deflationary. Some of this can be tied to population. For us in the States, it's basically just due to the fact that we spend so much fucking money on everything, right? When you sort of put these into perspective, the way in which we import, export, we've had less exports. The majority of money being spent by government is on things like the military, which doesn't directly impact our economy, really. We don't have, it's not like soldiers are spending money in the States or things like that, right? And so it's not really US companies either. So a lot of these things don't directly go back in. And so what we're now seeing is this shift to government spending that goes back into the economy, like writing normal everyday people checks, right? That's never happened before. Not in this way, right? And so you're just giving people money. That is going to be, again, this reinflationary state we enter, which is where we go from, okay, possibly we could have a problem because we're basically printing money to save institutions in the economy, which we started with QE in 2008. And now we've turned it into, well, we can do that, but what we can do is do it in a way that's actually going to help the bottom end, and it lets it sort of balance out a little bit more, right? And that's where we are. Things look good. We'd have to have a big change. It's not going to happen. Biden's not going to one day. First of all, he wouldn't even have the power to basically, there's not going to be some weird thing where all of a sudden everyone changes their mind and, we're not going to do anything. Even under Trump, he didn't decide to all of a sudden get rid of every single social program and stop spending or shit like that. These things are not going to happen. Basically, the only thing that could happen is some interruption from the government in which we stop spending and stop doing anything. That's why the Federal Reserve is its own private institution, right? No one can affect the Federal Reserve's decisions on anything. And I think that's an important factor to continue to look at, is they've become very sort of impactful and also political in their own way, in which they're trying to actually, they're not trying to be political, but they can affect the politics side by introducing more fiscal spending, right? Powell's came out and said, listen, us at the Federal Reserve think that the government needs to spend more money, and then they did, right? So that's going to continue, and these things are big ideas. These big ideas don't go away. And so again, we keep buying every dip, we keep trending, but the indices will stay the same. We use them as the average, the benchmark, and then we trade through the companies that we want on a more technical basis. Yeah, that's it. So, all right, let's talk about this Viacom chart, because people, if you looked at it, you're probably like, are we actually do this? We drew these lines before. We did on the Discovery chart as well. Discovery is, of course, going through this whole thing with T, and so there's a lot more going on here. Again, this Discovery candle and the T candle from the merger coming through here. Again, you had plenty of chances on this day. I didn't hear anybody get fucked up on this. This is, again, all through pre-market. On the Viacom, I think we have some interesting things that could happen through here. Now, this candle really broke out yesterday, so I put it to yesterday or 2 days ago. We're now at 4.5% here. Now, we talked about this right into the earnings date a little bit, right? And we've talked about this sector. Now, we finally saw what happened, right? We saw that it was AT&T and Discovery is doing the merger with their media, right? We've been talking about this for a long time now, that every time we look at these prices, we can see that there's been a lot of rumblings going on this sort of side of things, and I don't think that was it. I don't think that was it, and that's why we were looking at Viacom through things like the Arc. This is the Archegos trade that fucked it up, right? When we talk about the whole sector, that was not it. That wasn't the whole thing. There's definitely more consolidation coming through here. And again, think about how public companies work here. You know, you're always sort of under the grasp of larger companies that have cash, right? Look at Amazon. Amazon's buying MGM for $9 billion. Amazon has over $250 billion worth of cash. 250 billion. MGM $9 billion. It's not even a dent. Viacom. Viacom is a $25 billion company. Every single major company has more cash on hand than the size of Viacom. I would say that Viacom is on the radar. Look at it's significantly down from the high. It's in a very sort of predatory spot. They don't have the cash to protect themselves by buybacks, and so I would say that this is on the menu. We're up significantly this morning. It continues to go up. It's been going up over the last 10 minutes or so while I've been talking. Yeah, let's take a look at what happens with that coming up. And again, I think there's more going on in the broader market. That's something similar with the Wind trade, right? So I'm pretty sure there's merger and acquisitions going on here. It was supposed to happen a long time ago, never happened. Again, LVS selling all their properties, things like that. I'm pretty sure Wind's picking up some people. They have cash. But yeah, we're in a very sort of aggressive M&A sort of time period right now, I would say. And so we're going to be keeping our eyes on things like that that can be spotted with technical, right? We see trends change and we see moves that tell us that there's possibly something happening in terms of M&A because again, if you're going to take over a company, you start laying the foundation months before, right? You're buying up months before, and we usually see that and spot it. We have spotted it pretty well and consistently here. So, yep, this should be a fun day. Should be a fun day. Again, if you didn't buy yesterday, I mean, you've got plenty of time. We've got, you got until we're not going to live anymore. So things are the market's always going to be here. So there's plenty of pullbacks, plenty of times to continue to buy on trends. If you buy at a high and then it goes down to a low, I mean, I guess you'll have to figure out holding that, but stop buying on highs and selling lows. That's not fun. Certain bit up the day. Continuation from some of the pre-market action as well. Chinese companies looking decent. Again, clean energy is continuing a little bit from yesterday. Some of those have sort of found a bottom, possibly. We'll see if that's actually true or not. Spot continues. China, we'll continue to keep our eyes on some of the Chinese companies. They're obviously coming out from a very low point. We'll see if those need to consolidate down there or what exactly is going on. Again, it's all China. Now that China came out and talked about Bitcoin and cryptos altogether in terms of regulation, maybe they'll just shift their focus from equities to cryptos in terms of regulation. Probably not, but probably continues. And by the way, Bitcoin did whipsaw back up. Now the question is, who bought it? This is the biggest question. Who bought it? Was it retail or did institutions buy on retail selling? When you look at it, it looks more like institutions sold. They probably bought everything back as well as a test. Obviously, there's a lot of retail selling in there as well, but it doesn't really amount to much. We're back to 42. We're going to keep watching it, right? We're going to keep watching it. And we're definitely watching it for the flows and everything else to see what exactly. Again, that sold off $500 billion worth of Bitcoin. I mean, $500 billion, that's not going to hide somewhere, right? That's a lot of money. So 500 billion, did it re-enter, or did we have a wide spread and maybe only 250 billion entered back, and now we have $250 billion of cash somewhere, right? Just all together on an average. We'll have to see and keep watching it. That's where we can't really take much away from that day. It didn't whipsaw all back at once, which does, hint that it's possible that everything re-entered. If it was very quick, then I would have said that doesn't even compute. That means the spread was too wide going back up. But for now, it looks decent. It looks okay from there. All right. Should be expected anyway. 30% corrections, but it's a different story when it's up so high now. Let's see. We're above 323.77 on the Qs. Dow's continuing as well. Again, the energy side is going to be basically the most volatile of our value positions right now because of crude. Commodities are going through a little bit of a shakeup right now, right? So if we look at these, anybody that's in this position, this just came down from a high, right? It's going to be doing this when commodities are going through such a sort of a chaotic point right now. Even though it doesn't directly affect crude, they're all commodities. Commodities are all traded together, so it's important to note that there is volatility there. So you have to be aware of that. If you're holding for a long-term idea, then you just hold through the short-term volatility, right? That's sort of the point. Bank's just sitting here as well. We are just getting more action on this side. We'll see how this turns into going into the weekend here. I am curious about the Ford move. We'll see how that continues. They did. I mean, obviously, there's some news buying there. They announced the F-150, the electric F-150 last night. I'm assuming some of that's in here. Pretty sure it doesn't really change anything. So here's a good point of we were already pricing Ford as an EV company. So that's why it came down and didn't go up. If Ford wasn't making EVs, then this would have just continued trending up, right? This is the EV pricing. That's all this pricing in here and all this chaos in here is the EV pricing. So I wouldn't really amount it to much other than confirmation of an idea. So there's a little confirmation price right there. Should be interesting. We'll see if that translates to some of the other smaller things like your blinks and plugs, things like that. See if that translates. Viacom pulling back up now. We'll see what that looks like. Tcom's continuing. Again, we traded Tcom from about 2 months ago now. Updated that. The space move, I mean, again, this is like it really came back down to earth, right? So whatever's going on here, definitely not touching it down there. Again, we're like, oh, maybe we can get it off support here, and then it trended down forever. Never entered it. Same. Leaving most of growth behind right now. Again, most of them are getting bid because of their lows, and the only reason I would enter any of the other smaller growth tickers is because, again, retail entering the space. But we need to give it some time on some of those. We'll stick with the megas, things like Netflix down here. I mean, again, we're gonna give it time, right? Gonna give it some time. I know this looks tempting. Looks tempting down here. But it can stay in this area for a very long time, and it's really not that hard to catch it. It's if a trend is going to be develop, it's really not that hard to catch it, right? We may miss a percent or two. I would rather miss a percent or two than lose all my money for no reason. Protect their downside. Win big, lose small. That. Let's see. So technically, we are a little under 2.5% away from all-time high on the S&P. In terms of the Dow, the exact same, little higher. So again, we are at all-time highs. It'd be confusing, but we are still at all-time highs, and we rallied through all-time highs. That's half the half the issue here. We're still on the same trend. Same trend. I mean, it's 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 the same trend. If this is the average trend and velocity of the market through basically all of time, for every, again, all indices move the same speed. This is the same trend line always. It shifts, it can shift, but it's a different it's just a different level of supply, and it's just a timing. That's it. You lose some time, but it's the same speed. That's where when you see it continue to happen, you can go, okay, well, things will continue to happen. Yeah, that's why we avoid consolidations when we can, and that's why we buy the pullback. And you have to buy every pullback. You don't get to decide, oh, this one I'll buy, this one I won't. You don't know that. There is no, again, there is no saying, well, this is definitely the one. Nope, you're just going to have to consistently buy all of them because, again, things travel on the same speed and they won't stop. There's too much money here. There's over, again, the old number was $30 trillion equity market. It's well over that now, right? We're at like $32 trillion equity market right now. And that does not include derivatives, which is probably, in terms of exposure, I don't know. I think the last number was, what was it? It was almost the same size as the treasury market. So we're around the $20 trillion mark on exposure to derivatives. So yeah, there you go. A lot of options out there too. We'll see if we get as much. Again, we did not do much for the entire open yesterday, which was kind of dry, but it did lend to, all right, we're buying in a very good spot here, buying on the trend line, buying on the pullback, and we went bid through the rest of the day. I talked about before we left the morning call that most likely going to be a melt up lunch. Again, you melt with the trend line here. It looks like we're going to just solidify this trend and continue it. There's a lot of different ways you can look at it. We've done the exact same thing before a million times, right? When you come off this pullback, take a look. You're going to get something like this probably here. We don't really have any level of supply coming off this area. But if you look through here, we do have some areas in which we pulled back before, which is basically where we are. So it's possible we go bid through here, come back down to the support, test it, continue on our way. Because again, you have some of these areas in here. I don't really expect much action at all. Just, again, it's the same. No one's changing the script. Everyone's doing the same thing, continuing to buy. You're not going to get any. There's not going to be a interesting intraday candle here. You're not going to get anything like that. There's just nothing new going on, and there's nothing that needs to change. Right? You continue to buy, and most of us have already bought everything, and we can only buy. We can only buy so much, right? Until we take profit, and that's when we transition, right? We have new cash, so don't expect to see much here. Take a look over here. Bonds, bond yields coming back down from yesterday's quick spike. Europe doing a little bit better today. What do we got for active tickers? Nothing exciting. Cisco is making some interesting moves through here. Interesting moves through here from the earnings. A lot of bid in there though. Nice pickup spot through there. Or if you're holding through, you just hold through. It doesn't even make a difference. You lost a week of time. This is, again, here's your average, right? Let me throw you up here. Here you go. Here's your Dow average, right? Not very helpful, is it? Just trending on the same thing as every other indice. But this is where things like retail stores, some of these numbers are interesting because we have things like the Walmart numbers were significant, but then we sell through them, right? that's a very short time period, right? These numbers are great for a long-term position because it's going to continue going up. Not from it doesn't need to be the day after. We're talking about weeks after, right? And so this is where we can say, well, why are some of these things coming down after such good retail store numbers and everything else? Like, why is Walgreens down here? Because you're in the short term still, right? You have to get out of this area and you have to continue in time for those positions to get pushed through and for money to continue to enter. It doesn't all enter at once. Bulls come rushing in, right? We don't do that. Never been like that. TRM really coming off the low here. Basically the worst major company out there in terms of price. After the gap up, continue to trend down. Let's see. This is the first time we've seen some candles like this coming into earnings. That probably leads to some poor performance after earnings if we're going to go bid through here. That's definitely not something I want to be a part of. Semiconductors, we haven't seen much of anything, so we're still kind of waiting on this entire space. Again, we just need to see more. We need to see more here. When you look, we have some of these coming to earnings, just Nvidia's coming to earnings. Everything else had the earnings before, but when you have things like TSM here not really coming off either, there's gonna be a little bit of a dry spell. The debate is definitely being put on now because if you think back to a lot of the trades I made through here, and then when we were looking for them again, comes from the shortage from semis. There wasn't much debate going on through here. We had price moves because people were confident with their decisions. Now the debate's going on whether or not we should be pricing semiconductors higher because of the shortage or basically doing nothing. Right now, we're doing nothing. And so the question is going to be, should we price this higher than where we are right here? I would say yes, but the market doesn't know for sure yet. So we need to wait on pulling the trigger on some of these, which is again why we're only trading through megas. This will come. This will definitely come through. I like where it is. It's just not the place to be putting money right now. It's not. Nothing's ever absolute guarantee, but that one's much lower probability to work right now for sure. In your way, let's see. How far are we from the trend line here? Let's see. Let's see here. Trend line is a little over 1.5% away. We're already up 0.5%. That would be a 2% day if we went up to the trend line. I could see maybe coming up to the local high here. That would put us at about a little under 1.5% day, and then maybe you make that same move from tomorrow up to the trend line, which would be about a percent day tomorrow. So maybe we put another little under percent on today, and then we put a percent on tomorrow up to the trend line. Something like that seems pretty likely. Again, it doesn't really matter. We're not taking profit there, right? So no one should be thinking about selling anything. And so, but just to think about where prices will be. So, we're all on the same page here. GD has been launching through here. Launching. Get some follow-up from other Chinese companies, but yeah, GD's launching through here. And these have been really beat up. We had that one good day from Hang Seng yesterday. A little bit of a stop here. Baba, who knows? Again, a lot of you can see how maybe it's now going to catch up to some of those. All regulation, right? Nothing held through here. It's all Chinese regulation. This right here is very bear flaggy. I do not want that. You got your little bear flag in here. This is not what I like. You get caught into one of these. Again, they come out tomorrow and say something about regulation, and you get caught in this little area, right? This breaks down, and then the party's over, right? Not a big fan of that. Not a big fan. right? You got this line through here, right? Pull, flagger, you go down. You continue this trend right through there. Don't think so. If it comes out, perfect. We'll look towards it. It's definitely coming off now. It's getting momentum. Look at these things. All right, definitely getting momentum. I'm not a momentum trader though. Definitely something there. Maybe maybe that idea I was just saying with cryptos now being hit by regulations will take back some of the equity regulations from China. There's only so many regulations you can put out. Not sure that's the case though. Not sure if I like that line of thinking. Still waiting on pharmaceuticals, everything with the IP lifting. All right, what about the Nasdaq? We want to see this trend line crossed. We did have converging supply. We're pretty close. We've done over 1%. You do have resistance through here. Resistance around the 326 area. 326 and a half. We're rating that supply right now. Probably goes flat through here. Could melt up through it during lunch. Or you just bust through everything right now. Which is probably more likely. Probably get out of this resistance right now. If orders continued, we would. If demand continues, we'll go through. It's very, very much of rebounding growth numbers. If that does happen, the Dow pushes out of this supply here as well, which would put a lot of points through, which would recover some of these tickers through here. Things like Cisco from the low here. That's why the bids continued. That could basically retrace all those points if things did come out of that. I'm not sure if any of these require buys. I mean, everything's basically buyable through the buying or buyable through the Dow side right now, but only if you needed to add more, I guess. Looks like that selling stopped from the travel side. Getting very volatile in the short term, where you take advantage of it for the long term. What was that again? 2258. Definitely still holdable through right there. Nice starter on SI. This is going through the trend. Very close. That probably comes through. e-commerce still waiting on that move to go upside. TCOM making the, or you have thing moving a little differently on this sector while we can't use the averages. Not moving. eBay is down to the bottom of the trend line. Post that chart. This is, again, we have this idea of the consumer side, but then also there are things like COVID winners, which we've talked about as sort of our next step is to somehow get involved there. eBay's still continuing the consolidation, but it's at the bottom of the trend line. Definitely possible to continue to pick up here. This trend has just been very nice. The nice trend from the gap down, you're still getting a good price. again, the way in which the price is moving is this trend, so it's it's not much of a downside like the other growth tickers, and there's the same idea of upside. So I don't mind where this is again today. Going into a weekend trade, it's possible to take something like an eBay trade. Again, it should not be a big part of anything, but it is definitely there. Things like that are on the menu right now. You want something a little bit more exciting, you know? Nice, you know, a nice continuation from yesterday. That's all that matters. Those of us that have bought at the low, this gives you or gives all of us a nice baseline going into tomorrow and whatever comes from tomorrow heading into the weekend, so that all you really want is that when you're buying at that low point, especially when you've just continued buying, is that you come off the low, right? And then you don't have to worry about getting stopped out of that trade. You don't have to, start to question maybe you should change something else to protect it. Maybe you don't have to do anything, right? And so we're off the low. That's it. It again, if it's gonna go back down to the low, you're gonna see it. You'll be able to get out of that position. If right now this stopped moving and started to sell down over a percent to where you entered, we're all gonna see it, right? It's not gonna. How would that happen? Billions and billions of dollars would need to all be sold, right? On your one position, right? So that's not gonna happen, or at least not in a way that you won't see it. That's why when we take the low buy, we're taking it as soon as we see it, because now you're in a good, comfortable position, and a lot of people are in a nice spot, right? Especially going into 2 days left in the week. Always nice to go into tomorrow with a nice base, so that when you go through that day, you don't need to worry about your positions going into the weekend. If it's a long-term position, doesn't really matter, but for anything that's got a little bit more risk on it, definitely nice. Definitely nice. God, all of those smaller tech side companies look terrible. Netflix coming up the bid, they all look like this. This looks a lot better. Still need to get through that supply, but they're all just going to sit in that supply. I don't think any of them come through. All of these moves, very similar. It's the problem is it's just all pre-market action that gets momentum, and then as soon as that buying stops, it stops, right? That's half the problem with some of those, which is why I do not go chase momentum. You see something going really quick off the open, you either get that from the immediate start, you can get immediately out, which is what everyone's trying to do, or else you're going to end up trying to chase momentum and then you buy it at the high, right? Which is why I do not do momentum trades, and I do not ever go, oh shit, I bought at the high and I sold it at a low, because I'm not chasing anything. I don't chase anything. I'm a dog. I get chased. We'll be forming through some of these. Start thinking about some of the good COVID tickers that we've had. I mean, we're in some similar territory for most of these tickers. All look like they need a lot of time, though. Is that out of the woods? Let's see. Not yet. Teton is not out of the woods yet. What's that in relation? Yeah, these are gross. The COVID winter tickers are gross. We'll see. We will see. Do not have confidence in those right now. Eventually, but not right now. Let's see. Gross. I mean, that's just gross. Why would you buy there? Don't do that. Ugh. God. Yeah, that's not happening. Let's see. A lot of these are just, they don't look very good. A lot of these growth tickers, they just don't look very good. They're just in the you can just see that they're in consolidation still. I can draw the same line on every single one of these charts. You take this, you go boom, boom, and you've got the problem that this trend line right here, you buy right here and you get smacked on this trend line and it comes back down. See how violent the move is when it comes down? Because you're in a consolidation. People aren't really buying. They're fucking consolidating price through here. You have to wait for the breakout. We can confidently buy value on pullbacks, whether it's consolidating or not, because we're buying at a low. The problem is when you're buying growth, you're in a deep consolidation. It's not like you're not really buying a low. You're just buying the same damn thing. It's all the same in here. That's why it's hard to look at. It's over a longer period of time that things actually are happening, and moves that you see day to day don't really mean much of anything. It's not until you get a move that actually breaks you out of consolidations that you go, oh, okay, that's a breakout. Oh, right. We're out of that, right? We're out of the woods. Like if you saw me, right? You're standing at the edge of the woods and you go, hey, where is that guy? And then I come sprinting out of the woods. You're going to go, hey, he's out of the woods. You would be right. You would be right. I was in the woods, now I'm out of the woods. That's literally how these things are. They're in the woods. So you can't really do anything with them because you can't see in the wood. A lot of obstacles in there, right? A lot of trees, a lot of wood, animals, noises, bugs. That's what growth is right now. It's a forest. I'm gonna stick with the things I can see. Good with that. We'll watch Piton and see if that's getting out of that low. That got beat up a lot more, so there might be some swing trades through there. Possible. Retail possible. Again, if it's what I just made of analogy of in the woods, if it's in the woods but retail are trying to figure it out, then we'll go play the game because again, we'll take advantage. That's the boogeyman. I don't mind trading something in a short-term sort of way if I can take advantage of others that are trading it poorly. But it needs to specifically be in that area. Roku is also in this bear flag look. Again, I don't like to call out a pattern unless it actually breaks down or breaks out. But I also know not to buy in an area where things could be. I don't want to buy something that could be good or bad very quickly, right? And especially when there's things around the sector that are happening we don't really know. If it's at a different spot, like back in this area, we talked about it around this candle here. If you bought there, things are a little different. Now buying at this higher point and with very little activity, I would not be a buyer right there. I would need to see something better, right? When we were talking about over here, we had some nice price action, right? Nice little trend. You make some money. Over here, ooh, I don't know about that. That little bear flag right there. This deadly little downtrend right here. That's a lot different than over here, right? A lot different. This right here sets you up for a nice little downturn real quick. Could be a quick upturn, but we'll see it. You'll see it. You can catch it if you need to. Won't be momentum or anything like that. Be a breakout. So there's still some dangerous. There's definitely some dangerous tickers out there that want to be avoiding anything. I want to stay in my lane. We'll put the aggression on where it's called for. Yeah, see, none of this is all phony price action. I mean, just gross, gross, gross. Gross. Like Chegg. We had every growth ticker do the same. They had the nice March breakout. We had everything trend, and then they got smacked. Squaring did not continue. Good thing I didn't do that. Okay. Make a couple trades here. 10 o'clock. Continuing. We are continuing bid through there. You can see on the NASDAQ here. NASDAQ coming through. Coming through this area further. Getting up to the trend. Very nice move there. Again, led by megas. See how Facebook does. A little bit slower here. You look across the board. Things are sitting on levels. You're really looking for that local high right there in the move. Double bottom idea coming through. You look for that to break. And then you're really getting on your way. Otherwise, you're still in the weeds a little bit. Again, we bought at this low. We bought down here again. If you bought over here, this was not lower. You did not lose money. If you bought 3-month out options here, you were still higher this candle. So again, there's not much problem on the mega caps. Not much movement there. I don't think anyone really cares on the option side for longer dated because again, everyone, you ask anybody in the world, everyone will say that every single one of those is going to be up in a month, 2 months, 3 months, especially 3 months. So those are pretty straightforward, especially if you're buying at the money. I mean, it doesn't get much more straightforward than buying a mega cap at the money 3 months out and going, am I going to be at this same price in 3 months from now? Is it really betting if you're going, I bet that Apple will be at the exact same price it is right now in 3 months? That's your bet. That's like betting that LeBron will score at least 1 point. He's going to score at least 1 point in this game if he just plays. That's a pretty easy bet, but you get paid for it better than by just buying shares, right? And then you take that and then you get a little bit more aggressive, right? But that's not really where we are. It's always funny when you think about options that way. Yeah, if you buy at the money contracts, you're literally just betting that it's going to be the same price in the future. Yikes. And you get paid for that? Oof. And that's why we just keep transitioning them. Once they get to a point where the delta's too high and we're not getting an exponential return anymore, we go ahead and take profit on those and at the same time buy new at the money 3-month dated contracts. And we just do it over and over. And if you do that, you're going to make about 100% a year. You're not going to make 100% on every trade. So it takes a lot of trades and it takes every pullback to buy every single one. Sometimes it'll be slower. Like right now, it's slower. Moves are just coming slower. There's less transitions overall. You're holding for a longer time. That means less return, but it's still a consistent return. So that's why I've added in dividend ideas and taking less risk. When things move slow like they are right now, when you enter a little bit of an inflationary state, things do move slower, which means you take less risks. That's the most important part, is to know when to take a risk. Right now is not the time, right? People are out there trying to day trade and take risky swing trades right now, and they're losing money. And that affects their overall yearly performance. If right now I just get a consistent return and I'm not losing money, you're going to do well, right? And that's the difference, right? Someone right now might have lost, 10% on some of the growth tickers right now, right? Maybe 20% from trying to take risky trades that they were making work before. I've removed that minus 20%, which if I did continue doing the risky trades, I probably would have lost quite a bit. That's why I didn't do it. No better. Go from 30% probability of making 100% to probably like 10%, 5% right now. Not very good odds to get a nice trade. So I just parked the money. No one's going to complain about a consistent return. But everyone's in a rush. I don't have time. I want to make all my money right now. All right. It's not going to be done in one day. Definitely have the portfolio that could make something in one day. Because if in 3 months from now everything does continue to trend up when we take profit on everything, yeah, that's called getting rich quick. Yeah, it's the day that you hit the sell button. It's not today though. Today we buy. This looks like it's going to be another very chill day. See, here, that's the lie of the market. Nothing happens intraday. There's nothing happening intraday. I see the exact same orders I see every day. This is probably what Friday looks like. Very similar to the last Friday. Because we're going to be in a very similar spot. And it's going to be a little higher. Going to be up here. And then we're going to trend right into the trend line. Now the question is whether you get rejected on that, right? This time, most likely not. Most likely not. Due to the timing. I don't think it's out of the woods to say that we're getting to the trend line tomorrow. The NASDAQ is going to get through here. Let's put a little red on here. We're right at the trend line already. If we closed here, we would probably open on the level. And with what we've seen on the Chinese tickers today, that most likely means, they would just continue and convert over to the China markets on those exchanges, which would probably open us up higher on tech anyway. So yeah, it's pretty much a high chance, unless we had something like we pulled back very deep here during lunch. It's hard to see that though, because again, to buy right here, no one is selling anything they bought yesterday or today, so it doesn't even make sense. I'd say this is probably the end of the day right here. On the intraday chart, it's going to be over here, but it doesn't really matter. Let's look at the daily. Not much to see here, folks. Very nice. Very nice. What we'll do is start keeping our eye on retail specific areas. See if we can start to spot some of that. Like, you can see how Ford didn't continue momentum here. This space is just, it has to get out of this area. Everything on this side needs to get out. It's gonna be stuck in here for a very long time. WM tightening. Bot looks terrible. Let's take a look. Twitter, it's the same thing as everything else. It had the gap down. It's still not buyable. That doesn't look very good either. Does retail want? What does retail want? He coming up the low. That was a nice buy from yesterday. Uh, I'll let at least get back up to 204. This would be quite the problem to solve through here. On aerospace and defense, we have so many different things happening. BA, GE, LMT. Some of this is all over the place. This is where you can start to see when we started talking about some of the big idea focus on, we're talking like macro ideas, not in sort of economic terms, but in terms of like geopolitical reasons for, pulling out of Afghanistan, things in the things happening between Israel and Hamas and all these things. And how does this form into government contracts and put pressure on different areas and these type of things that lead to further government spending? Or we talked about on the aerospace side, things going on in space. How much is actually going to be given to SpaceX over public companies so that we can actually trade it? We start to like put these things. As soon as those ideas start to come out, you can see the market just start to try to debate it, and you get things like, again, you can see, like they're on LMT and things like Boeing. Now Boeing has a little bit more on the, obviously a little bit more going on the aerospace side, but not specifically for government spending as much. And it's more retail focused through producing planes and shit like that. And they've done poorly over the last year or so. But this type of price action, you start to see debates come through. Let's just stick on the LMT chart. We're over here, all of this, we're at the same spot, right? We've had a couple swings in here and we've seen some of the moves, but a lot of this you can just tell is just a little bit of uncertainty because of, again, a debate on what exactly the hell is going on, right? And this is like a more geopolitical and possibly a policy driven sort of situation. So it's kind of it's not very easy to tell what exactly is going on in this area. We've had some consolidations. Possibly this gets moved down to here. Maybe it's breaking out of the consolidation down here. It's definitely a lot of uncertainty, right? And being debated, which is we're doing in a lot of different areas right now. That which is good because if we can catch them as they're breaking out, and also it's the mindset we're taking towards some of these ideas, which is that we're thinking about them and discussing them and trying to solve them ourselves. It's in line with what the market's trying to do, and so a lot of times that in of itself allows you to catch a breakout because you go, oh, okay, actually, I think I have, it's not, you're never going to be perfect and be like, well, I know exactly why this is happening, or I know exactly what's going to happen, right? Those things don't really matter. It's just being a little bit ahead of an average on the curve to say, oh, actually, I think this makes more sense now and I can take that trade more confidently than before, because before we were still debating whether this was something that was going to happen or not, or whether this would be something the market would like, right? And so you get into these weird little pauses that are driven by some big idea, and sometimes they just go away, and then price goes back to a trend, right? That's usually the answer, is how do we get back onto a trend? Well, usually the discussion just goes away, and then you get going again. Think of semiconductors right now. Really, all semiconductors need is for the discussion on supply shortages to go away. As soon as it goes away, you go back to a trend, right? There's not some mystery to solve. It's we just need more, right? For the equity market doesn't need semiconductors to make more semiconductors. The world would like that. The equity market just needs to know that it's going to happen and have confidence that it is going to happen. Of course it's going to happen, but what's the timing, right? It doesn't really matter for the equity price. It's just a valuation of a company, right? It's not a true, it's not even the true valuation. Do you think this is the value of semiconductors? No, of course not. But you can tell how much pressure it is put on every company that doesn't have them, right? So there is a need there. And so, yeah, the trend's probably going to continue because it's going to continue to be needed. And all that needs to happen is the topic needs to go away. As soon as the idea goes away, you break back out and you get going again. That's what happened over here. We got back into it, but then the discussion popped back up. Oh, no, shortage. As soon as it goes away, it'll come back, right? Usually things don't get solved in terms of the market, because the market, it's not like we're all we have is price, and we just take away that when prices go back up, that must be a good thing, right? They're doing something right. That's how we communicate, right? As a market, we communicate through trends, through prices reaching a level, and through prices coming out of some uncertainty, which we understand as consolidations. And it's very easy to see, right? That's when we talk about getting a slap in the face. A lot of times the market gives a slap in the face and you go, "Oh, okay, yeah, I should have bought that. Yeah, I saw that." Yeah. That's really where we are, and we basically have the same idea across the board. I don't think anyone in the market really has a different idea. It's more right now, it's more towards in the future, what does this all look like if inflation does get going too hot and we can't, as a sort of as the federal government, and possibly as a sort of a worldview, if we can't handle inflation from the United States and the rest of economies opening up, then what happens to equities? How does our game change if everything around us is getting more expensive? I don't know. Probably makes us more expensive. That's my view. If everything else gets expensive, this will get more expensive too. It's not gonna. It's not gonna hurt. It's not gonna hurt our money. That's all this is. It's not the true valuation of companies. Not what this game is. It's just how much money gets put into it. The more money that gets put in here, the more prices go up. Why is it that when more investors came into the equity market last year in the summer, all those retail investors, why did prices go up when they did that? Because there's just more demand for the same amount of supply, right? More people threw their money in. That's all it is. Just economics. That's why we try to avoid some of the fundamental ideas as much as possible, because you get caught trying to do that, and then all of a sudden money gets thrown into the market and prices go up, right? All it takes is more demand. That's why we're trying to have this discussion on possibly cryptos get sold by retail. They're going to probably want to come back into the equity market. That demand will just push prices back up, right? They were over 20%. They were almost 25% of all volume in the market. Not very long ago, right? Short time ago. Now they're not anymore. But when they're here, we can see it, feel it. Not hard to, it's not hard to change that discussion. We will see. But it's a lot of fun. It's a lot of fun. I think even days like today, or like yesterday, you can see the candle. But we all were here yesterday, and it wasn't very action-packed, right? Not much happened. But, it seems like a lot happened, right? And that's why it's more interesting than on the surface when you see it, but you just got to understand what's going on. Let's see how many people get baited buying up here. Buying up to 500 on Netflix. Yikes. What's Bitcoin at right now? Let's see. Oh boy. Hold on. I don't think we have it on the daily. We're not going to have it on the daily yet. Let's see. What can I put this on? 30? How about an hour? Oof. That looks spooky right there. That looks spooky right there for the downside. Yikes. I mean, it could be good. It could be good. But it could be bad. This sort of move through here? Yikes. It's hard to get the time frame. I probably need to extend the time frame a little bit here, because this is not really what I mean. It's a little bit sharper. Probably should, but it's okay. You can tell how I don't really have things connected well. And then this downtrend, which we've sort of solidified. It's kind of weird looking how we've actually... I don't really want this to be connected here, but that's okay. Just to show the idea. Do this real quick. You've got a very long downtrend through here. Again, I'm on 30-minute, but just to sort of show it. Got a downtrend leading to a consolidation from big selling yesterday. So price has to consolidate that move. They're going to break out or going to break down. If it broke down, that would be a lot of points. Heading down towards here. So it's got to bounce on that. What if we put this on 15? Not much better. Not much better, but you can see it a little bit more. See it a little bit more. 2 hour. 2 hours pretty tight. Maybe keep it on the 2 hour. There you go. That actually looks a lot better. There's not enough data yet to put it on a longer time period, but looks like the 2 hour lines up about the best. So this is either the breakout or not. Or not. We get this, we actually get this a lot like this. But what I would have liked, if this was going to be bullish instead of bearish, it wouldn't be like this. When we have a bottom wedge, you have this. This actually gets further pushed this way. But the problem is that you didn't... So to put this into perspective, like when I'm looking at like actual price moves and whether I think it's actually bullish or bearish, if you're going to get a bottom... So we have a bottom triangle and a bottom wedge, right? This consolidation that happens at a bottom of a trend. So this is the trend. This is a downtrend, right? So a bottom pattern happens after a downtrend, okay? So here's a downtrend. A bottom triangle would be this. This would be like this, and both lines point to a different direction. Your top trend line points downwards, and your bottom trend line points upwards. But it's a little bit flatter. It's a bit more of a triangle. If you get this upward sharp move, this would be a bottom wedge. Now, the thing is with a bottom wedge, a consolidation that works this sharply, what you need is higher highs. You need to have a higher high here. And you guys have seen me draw these patterns like this, where you have a higher high like this, the sharp higher lows, but then it also has higher highs that leads to a wedge like this. So it's a bottom wedge. This does not have that. This price right here, when it bounced off this trend line down here, this would need to come up and post a higher high than here. Or at the very least, get pretty damn close. Right now, it's just stayed on this trend line right here, which is bearish. That would be bearish because what's happening is that when this popped up off here, it stayed on the same trend. And that that does not show confidence. And again, it's this candle in here. If this didn't actually happen, if it just traveled here, then it wouldn't really matter because we wouldn't have enough yet. It's the fact that it dojied through here. This is a 2-hour chart. It dojied through here. That was a loss of 5%. That's not a confidence builder right there. That price movement. So this would have continued up to here. You would come back down, and then you would get going, right? And I would be a lot happier with that because even if it broke through here, it wouldn't really be that big of a deal, right? It would be the fact that it went bid. We didn't get that. This looks pretty interesting. That looks pretty interesting through there. Again, it's more behavioral. It doesn't need to happen, but it is behavioral, a behavior sort of timing and a psychology part of it that if prices were higher just previously, again, these are 2-hour candles, if prices were higher just 4 to 6 hours ago, you feel a lot more confident buying 5% lower because you're like, okay, well, 4 hours ago it was 5% higher. It pulled back, but I feel more confident if it wasn't and it actually was higher a day ago, 24 hours ago, and now it's lower, right? And after a big drop, now it's into territory where now it's a different discussion. You're trending here, you have a doji, you're tight, you would need to see price actually come up and have this form a little differently. Interesting when I see something like that, because that would be institutions right now go, okay, institutions are gonna sit here and they're gonna wait to see if retail can actually push the price through here. Otherwise, this trend line is gonna stay intact, right? This trend line through here, this wick here is a dagger, and then that's gonna sit here and retail won't be able to push through that. Now you have this trend line here, which means you would continue this trend line. This would be just a continuation of this trend, which is what Bitcoin's been doing. We've been doing this trend here. And that would be very interesting. That would be very interesting. Actually lines up perfectly on the daily. Now, we've done this before. The same thing is what we do. This downwards move, you can tell the difference. This is why I talked about I didn't want to see all the price come back immediately. It causes a problem here. It does cause a little bit of a problem here because everyone that was willing to buy, it's a spread that was wide and not so much all the money came back in. If you consolidate at a low, it's a little differently. When you consolidate at a low, you like something like this in here. When you consolidate the move, right, you get a sort of support-driven approach and a reasoning. Whoops, sorry guys, fucking whacked my mic. A reasoning approach that allows you to get out of a low, and so that when you break out, everyone can be basically trending off of that. Because again, the selling happened, but there's enough buying coming through that you reach an equilibrium and then price gets going. There is no equilibrium being reached over here. There's not an equilibrium. This price is getting more volatile and it's whipping and you're causing very large high to lows. It's going to take a long time to reach an equilibrium here, right? The high to low over here was 45%. We saw that strange time yesterday where an equilibrium was being reached intraday for like about 45 minutes or so, but that was just 45 minutes of equilibrium. We need a day's worth of equilibrium, which is when you get a candle that the high to low is not very large, right? You get something like this that's only a little over 2.5% high to low. That's pretty good, right? And you get those kind of days you reach equilibriums. This is not the start. That's 22% high to low. That spread today, that's not what you want coming out of a whipsaw. You want to chill. See if that trend holds. It's right at the tightest point, basically, right here. See, this equilibrium here is not what we're talking about. That's not what I'm talking about. That's not what you want. You want it over. You want smaller high to low here. This right here, this high should have been higher. Should have been higher. Could be a fault of these candles. I'm not exactly sure the exact price. They could technically be lower. I'm not 100% sure. But it's holding the trend so far. And again, it's because it's come from a downtrend. It's gonna be cute. Gold look is exactly the same, which is, I don't know. Who knows anymore, right? Money came out of Bitcoin, went to gold, we say, right? Why do they look the exact same over here then? Who knows? Who knows? Who knows? Oh, I'm looking at 2 hours. Losing my mind. I like how the 2 hour chart and the 2 hour chart look exactly the same on lumber. What in the world? I'm losing my mind. Let's see how that comes off the law. I'm really curious. It could just it definitely could just continue. This could just be if I'm a commodities trader, I don't really know the average. I mean, that fits perfect. Throw this on the weekly. Not enough candles because the way the future contracts work. I mean, I don't want to do it. You can do it further back, but all right, I'll do it. I'm a cook. Somewhere in there. There you go. Oh, there's a doji there and everything. There you go. 25er. That was 100%. Over 100% 25 days, which was then 150% in 30 days. Yikes. 25. That's 8. Oh god, if this happens on fuck commodities, dude. Holy shit. Imagine being a commodities trader. You'd be losing your mind every single day. Imagine if you had to trade through this kind of environment. Look at this shit. I mean, it does the same thing every day. We would be sitting here and we'd be like, well, it's up today, it's up today, it's up today, it's up. And then it would be like, oh, it's down, it's down, it's down, it's down. But we're talking like 20%, 10 to 20% moves. This is 100%. Yikes. This is kind of weird. I don't even know what spawns. These are futures contracts. So it's like when you see things like that, that's like, okay, lumber prices are finally going down. Yay, houses are finally going to be cheaper, new houses. And then as soon as lumber prices go down, everyone goes, oh shit, I can finally buy a bunch of lumber or build some houses. Down 30% from the high. And then it jacks the price back up. That would be silly. See if home builders move in the same way. We might be able to play. Oh, actually, wow! I'm a fucking madman. I'll tell you, a genius. Be a great weekend trade. Nice weekend trade. Do a home builders play? It's a construction ad. Yeah, do a. I don't know if this is actually it's the problem. I don't actually know how to read I don't know the specifics. That's half the problem. I don't know the specifics on the lumber. We have 11:15 to 12:45, 10, 12. That's close to 12, 10 o'clock to 12. During the trend, it is 10, 10, 10, 10, 10. So when we're trending it, we start at 10 o'clock. The big orders I'm talking about. I know the hours that it trades. So we come up off the open if we're trending. The big order gets placed at 10 o'clock. I don't like that candle though. Let me give this a little bit more time. A little bit more time. Do a home builders and things tied to lumber commodities. Looks very good from Nail. I'm surprised I didn't actually buy home builders already coming out of this low. I think that lumber move spooked me. But if it is coming out of there, and I feel confident with the gold move and how well I've captured this, I think I can do it because I trade. Again, I used to only trade the leveraged gold minor ETFs, things like JNUG, Nugget, those things, exclusively. If you ever used to trade those, say like quite a long time ago, but I was your axe. Used to be your axe on these because these are not very high volume traded. Barely anybody trades. I mean, it's still a pretty decent amount. It's enough for liquidity. But on the options, used to be the only one in there making markets. I would split the spreads. I would make the swing moves, and I had the same basically trade every single week. The timing was the same. I would line it up to the expiration, selling on Thursdays, leaving Fridays basically liquidless so that I could then buy at Monday open when everyone else would finally be able to get the liquidity. Oofa. Those were the days, but I did it for so long that I basically wasted time. I could have made so much more money doing something else. Rip. But that's all about trading in the first hourly candle. And so that's why I was looking at those 10 o'clock orders, is that if I know that the order is going to be placed at the same time every single day, and then I have 30 minutes to place my order, then I can understand how the lumber commodity affects the actual home builder equity, the equity side of things, which again, they're two different markets, but one tracks the other, right? And then the other doesn't affect the other, right? Or they're basically the same macro idea: home building, lumber, supply, demand through the economy, but those things are fucking long term. We don't see those numbers for a while, right? We just saw the home sales, right? Those things do not come often, so they don't really affect the discussion much, other than they're the driving force macroly. I think we'll get involved with the little home builders. If that lumber move makes it back. Those will be delayed anyway. You wouldn't see it immediately. Those are more on a weekly sort of time frame. So that would be like Monday. That would continue on Monday. I mean to type SPY again. Hughes, when it came to the trend line while I was talking. We're dojied on the trend line so far. We'll see if we get rejected here or not. Be interesting. Because this will either lead to a slight pullback during lunch. We'll just basically be chilling all day, or we melt through and then things get a little interesting here. This here is going to look a lot more like this does not look the exact same, but last Friday's move into the trend line on the SPY. This move here, that's what we basically just did with the Nasdaq. We know the Nasdaq's a little bit further behind. Move to the trend line. Let's see if this moves through here. How much time's left on those candle? 2 minutes. I don't think so. I don't think so. I think it's gonna get stopped right there. See? Did post a higher high. Again, this doesn't fucking small beans. Doesn't really matter. You like to be right. Dollar. Yeah, I think. What happened over here, by the way? Nothing at all. Why are people still over here anyway? Yikes. JD almost 6% now. What happened over here? Let's. No. Oh. Whew. Okay. Well, I'm glad I was correct on some of these moves because I would have looked like a fool if some of these actually continued to go through. Some of these smaller growth tickers that went up 3-4% from the very open and then have now started to pull back a little bit. We'll see. Some of these could definitely get going, but I don't think it's a trade that could be made. Don't see how. I just don't see how you're getting out of that one. Right now, if I bought these Netflix calls at open, I would right now see this leveling off and I'd be like, oh shit. Because you're in a really weird spot. You're in like a really shitty spot on every single one of these tickers. All these tickers. They're all in a really shitty spot over here. You run into all this supply in here and you're like, okay, how am I getting out of here? Because if you don't break the high, if you don't put a higher high on, right, a lot of these trend lines, you get into a weird situation where you just don't have it. You have nothing. There's no volatility coming. There's nothing coming to save you. Lunch is going to decimate your position. You didn't even do anything wrong. In the wrong spot at the wrong time. We'll see some of them. See, that's Q. We'll see some of them might be able to make it. Not sure. Where's like Twitter? Let's see. It might make it. It might make it. Maybe it's just, consolidating a little support here, right? And also, if the market keeps going up, it might give it enough. So that is, I shouldn't say that completely. If the Nasdaq keeps going up here, it is, get a little bid, then everything would go up. So that would be enough to push everything. Definitely would be enough. But some of those smaller tickers, oof, I don't know. I'll stick to the mega caps because that's what's pushing everything. You want to be in the leader. You want to be in the leader. Amazon's not leading. That's not a good example. You want to be in the leader. You can make 10 times as much money buying this than those smaller tickers. Cost 10 times as much, but nice. A nice bid day. Nice bid day. And obviously, I do want to see things go up. But let's see. How does energy want to do through here? About the smallest doji candle I've ever seen, but Interesting that we're getting bid through banks here as well. Looks like everyone's just buying everything here. Okay. Keep it going, I say. Keep it going, I say. I do not mind. This does put us pretty close to getting this tomorrow. That's not many points. Not many at all. I think that's getting more and more likely. But again, you would need to hold things through lunch. Where are we at on Viacom? All right, we're down to the level again here. There's your spot, boys. There it is. You're holding a support that it's gonna take you off. That is funny price action. That's pretty funny. Now this chart is really messed up, so the ratios are really bad. It's hard to actually tell what the ratios are. But look at this thing trade between levels. Down here, look at this price action. This is what it does. It's like playing ping pong, or it's like playing pong. That's how you know it's different. That's different. That's a nice spot right there. It's holding the level that it was rejecting before. It's just gonna break this high up here. This is gonna be a wacky one for sure. Gonna be a wacky one. Look at that. It doesn't even register completely correct because of the stupid candles. Oops. I'm not gonna make my percent joke anymore because I think there are people that don't still don't know how the percent joke works. You guys know what I'm talking about? Viacom came down 60% from its high. But did you know so it's at this came down to 40, right? But did you know that from 40 up to that high, it was 140%? How is that possible? How did it gain 140% but only lost 60% for the same amount? I usually make that joke and none of you like it. But I don't say it's a joke. I say, this went up 140%, but it only lost 60. Weird. That's because you can only lose 100%, but you can gain more than 100%. Math. That's why we don't like to use percents. They fuck with you. You gotta use the points. It all depends. Why 1% on Apple is more than 1% on some dog turd ticker. Because it's a little bit bigger and higher. Hey, big monster day. Oh boy. Not again, guys. These, I'll tell you, these low buyers, they can't keep getting away with it. I'm sick and tired of people being able to buy at the low and getting away with it. I'll be honest with you. You know? They come in here, they sell everything, and then they buy it right back at the low. I don't like that. Don't worry. It'll come down again, and then we can all go, oh, why is it going down? I wish I bought earlier. If only I knew. Just curious what supply we stay in, whether we stay in this trend. It does make more sense to stay in this area on this speed. No, they're all the same speed, but in terms of this, trying to enact like this is a consolidation, but probably not going to happen. Probably return to the OG trend line. Just not sure how we get up there. Probably a gap. That's why I'm thinking we close into the trend line here tomorrow. That leaves Monday for a lot of interesting possibilities. You close on this trend line here. That would then be it would be 72 basis points to the next trend line to gap on Monday if we were really getting hot. And I do think that this is a bit of a dead zone. This area gets covered very quickly, and we've seen it. See this gap from we closed here, gap. Open, moved, and we gapped. We have this a lot where you'll gap through one of these areas like this. And again, it's a shift of supply when you're on one speed, or excuse me, you're on one trend and then you transpose to another trend, but they're on the same speed. You will get an area in which nothing gets traded in. Nothing will be in there. It's a bit of a dead zone, and so you get this little gap in here that if we did close here on Friday, you're very likely to gap up there, or again, you're going to continue on this channel in here. But if we were going to move back up into here, definitely possible. Definitely possible. Not, then move through this trend. I would like to draw flat through here. A lot of the problem is that I don't want to have to deal with this again, where everyone went and bought value and the Dow went to 35,000 instantly. We just hit 34,000 and then we went to 35,000 immediately on the Dow. This is not sustainable. This trend line right here, that's not a trend line. That's a goddamn rally. What are we rallying to? Where are we going? You know how much money it took to buy from here to here? A fuck ton. You want to do the percent analogy again? That's 4%. That's less than 4%. Exactly. Exactly. All right, boys. Let's take a break for lunch. There's not much else to do here. Very nice day so far. Again, we do need to see some of this trend line be broken. That's like the Nasdaq trend line here. We're sitting on it. It looks very good. Interested to see what we get. And tomorrow's gonna be a lot of fun. I think tomorrow will be a lot of action because I think there'll be a lot of bets going into next week because retail, they look at something like this and a lot of people think like a candle like yesterday is like, oh, we're at a low, and then we go bid from there, and it's like, oh, maybe this is a good time to get back in. Like, we'll see how that leads into tomorrow. And since it's so tech driven right now, because again, we're trying to bounce back from a low. Everything else was at all-time highs. Nasdaq's not there, so a lot of interesting little prospects in the short term that make things a little bit more interesting when we are so long and nothing really matters. And I don't want to be that mellow though, so I like the interesting action we have so far. It's nice to make money on the mega caps when you buy them and you get the base up. So let's take a break for lunch. We'll see what happens during that time, whether we swing down or melt up. Doesn't matter either way. Literally doesn't make a difference, so don't worry about that. Yeah, we're on a longer time period than intraday or daily. We're on a weekly, monthly sort of look. So I'll see you this afternoon. Enjoy.